As we approach the heat of the summer, we've got volatility at record lows, now in single-digit figures, but we are in the midst of another slice of earnings. Richard Hunter from Wilson King joins us now with an update of where we are on the markets. We're not too far away from records here in London. We've got more records on Wall Street recently. But as I say, very, very low volatility. How do you appraise the markets and the opportunities for stock investors at the moment?
Yeah, I think the volatility point is a good one. It's far too low, and I think there's a lot of investors who would rather that it be higher. But stepping back from that particular situation, we've had this for some time around the equity market being the investment destination of choice. Where else are you going to invest? Are you going to invest in cash, bonds, government bonds on either side of the pond? The yields are so low that the natural place to be, if anywhere, the Footsie 100 yields on average around 4%. Even the US stocks, which traditionally yield rather less, you're looking at 1.5–2%, plus the potential for capital growth. I think that's a large contributor to volatility being so low. Admittedly, as time goes on, there will be more pressure on companies, US companies in particular, given those recent highs, to deliver the goods. They certainly did in Q1, and so far in terms of Q2 or H1, they certainly have as well. So whilst they continue to benefit from the fairly synchronised global economic recovery, cream will always rise to the top.
Yeah. What about the potential for the Footsie 100 over the summer? Assuming that's the case, is going to continue. We're not too far away from record highs on the London markets. Is there the potential this year to continue that upward move and break new highs later on the year?
Again, the Footsie 100, it's now well known, but it mustn't be confused with being representative of the UK economy. We know there's potential trouble around the corner for the UK economy as a whole. In terms of Footsie 100, the real drivers, as we've seen over the last year, have been the weakness of sterling, the fact that we've got a bigger exposure within the Footsie 100 to the likes of the oil and the mining stocks, which of course will benefit not only from any synchronised economic recovery, but also that weakness in sterling when their dollar earnings are translated back. And arguably, even in the short to medium term, should there be any sort of upward tick in interest rates, that should also be positive, all things being equal, for bank stocks, which is another large constituent of the Footsie 100. So as ever, opportunities will arise, and that's one of the reasons that I think we've been potentially hearing an increasing call to invest on any dips which will inevitably come up over the summer, because in the absence of volume, let alone anything else, any moves in either direction will tend to be amplified because of that lack of volume. So there will undoubtedly be buying opportunities as the summer unfolds.
What about the Footsie 250 then, the more domestically orientated stocks? Again, as someone that uses the UK market, does this represent more of an opportunity, or perhaps maybe not so much, bearing in mind you're worried about the British economy?
Footsie 250 is now getting interesting, in as much as that was pretty much the barometer for the UK economy. If you actually look at it now, it's probably 50-50. So it's probably 50% overseas earning, 50% domestic exposure. The reasons for that are fairly obvious. You've had some big foreign exposed stocks in the Footsie 100, which over a period of time have been demoted, and of course that changes the whole feel of the Footsie 250. But yes, the Footsie 250 is more of a barometer for the UK economy, but arguably the fact that it's half and half gives it an almost defensive kind of approach, on the basis, if the UK economy is starting to struggle, you've still got the other 50% earnings, where you've got that continuation and participation in global growth. So the Footsie 250, you could argue, is starting to show, on that basis alone, the constituent basis alone, some signs of being defensive.
Yeah, okay, right, Richard, thanks indeed for joining us. A general update on the state of affairs here in the London markets. That's Richard Hunter from Wilson King.